Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik and this is episode 30 of my Dow analysis series. In this video, we'll be analyzing the second largest company in the Dow by market cap, which is Microsoft, ticker symbol MSFT. Microsoft is the second largest company in the world with a $1.8 trillion market cap, and they split their business into three basic segments. The first segment being productivity and business processes, which contributes about 30% of Microsoft's total revenue. This segment is focused on productivity and communication within companies and includes products such as Office 365, Microsoft 365, Microsoft Teams, LinkedIn, and Dynamics 365, which is a suite of ERP and CRM products. The next segment is Intelligent Cloud, which contributes about 35% of Microsoft's total revenue. This segment is Microsoft's core cloud business, with the main product here being Microsoft Azure. They have some other products such as their SQL Server, Visual Studio, and GitHub. And the final segment is called Personal Computing, and this contributes the remaining about 30 to 35% of revenues. This segment includes a variety of products such as the Windows operating system, devices such as laptops and accessories, gaming products which include the Xbox hardware and lots of related content and services, and notably most recently in the gaming portion is Microsoft's bid to acquire Activision Blizzard. In January 2022, Microsoft announced its intent to acquire Activision Blizzard, which is a video game developer, for about $69 billion in cash. Since then, multiple regulatory agencies have tried to step in to stop this deal. The European Commission, the UK's Competition and Markets Authority, and the FTC have all brought up potential issues with this deal. The FTC specifically recently filed an administrative complaint, and basically the concern is that since Microsoft owns Xbox, they could potentially make some of Activision Blizzard's games exclusive to Xbox, and notably, this would not allow these games to be played on PlayStations, which is the major Xbox competitor, and this is sort of a monopolistic looking move to some of these agencies. But recently, Microsoft said it would be willing to sign a 10-year licensing deal to PlayStation, but that hasn't had any immediate effect on these agencies' disputes. And in any case, if the deal does go through, I think it would be a great asset for Microsoft. But if the deal does get blocked, there's not really any damage done to Microsoft, in my opinion. Looking now at Microsoft's most recent earnings report, they announced their Q1 2023 earnings at the end of this past October. And in the quarter, they generated revenues of about $50 billion, which was an increase of 11% from the prior year. But they only had net income of $17.6 billion, which was actually a decrease of about 14% from the prior year. The cloud business is still growing very quickly, with Microsoft Cloud revenue up 24% year over year. However, the PC business is stagnating and slowing down in the tightening macroeconomic environment. Windows OEM revenue dropped in the quarter actually, and PC and other device sales were about the same as the prior year. So overall, this first quarter showed that there are parts of the business that are still growing pretty quickly and have a lot of growth left, I think, but other parts of the business are slowing down, at least partially to some macroeconomic factors, I think. Taking a look at the balance sheet, we can see that cash is sitting right now at almost $23 billion, which was up substantially from the beginning of the 2023 fiscal year. This makes a lot of sense though, since they are trying to buy Activision, so they will need more cash at some point. Current assets were actually down a bit to $161 billion because of a substantial decrease here in accounts receivable, but comparing these total assets to total current liabilities of $87 billion, Microsoft has almost double the current assets as current liabilities, which puts them in a very strong position. And looking a little bit more into those current liabilities, they actually don't list any short-term debt right now, and they only have about $3 billion of long-term debt that is due within the next year, which is a pretty healthy amount, I think, for a company of that size. Adding this $3 billion to the long-term debt of $45.4 billion gives them total debt of around $48.6 billion. And comparing this debt to net income, Microsoft has produced at minimum $39 billion of net income every year over the past 4 years, which means they could easily pay off all of their debt in 2 years, which is what we like to see in a company. And from this alone, it is very clear that Microsoft has an incredibly strong balance sheet, but they also have a AAA credit rating, which just reinforces this idea. Now, onto the dividends. Microsoft is currently yielding just over 1%, which is pretty conservative, but they have a very low payout ratio of 27%, which means they're investing lots of their earnings back into the growth of the business, which is really fantastic for long-term shareholders. And they have been growing the dividend about 10% per year on average for the last 5 years, and they have been increasing the dividend for 18 consecutive years, which is getting them pretty close to achieving that dividend aristocrat status, which will be pretty exciting, and they should reach that by the end of this decade. Looking now at some valuation metrics, we will first examine the PE, or price to earnings ratio. As we can see here, Microsoft's PE is currently around 26, which is just a bit above their average over the past 12 years, which has been at 23. I think this picture gets a lot more interesting when we look at their earnings per share growth over that same time period. Here we can see that earnings per share has grown from just $1.81 at the end of 2009 to $9.28 per share in September of 2022. And this is a fantastic 13.7 annual growth rate over those 12 years. I think one thing to keep an eye on is the fact that most of this earnings growth has come actually in the past 5 years. So although I expect the earnings growth to keep growing quickly, the growth over the past few years will likely slow down to some degree, I do think. The fact that the earnings growth has been above the dividend growth rate is a great sign, because it means they will likely be able to continue growing their dividend at about that 10% rate. And comparing Microsoft to some of their peers, the overall information technology sector currently has an average PE of about 23, with the software industry having an average PE of about 30. So it's fair to say that Microsoft's valuation is generally in line with their peers, nothing too crazy going on there. I also used a discounted cash flow model to calculate a fair value for Microsoft stock of $229 per share. And when a 10% margin of safety is applied to that value, this yields a buy price of about $206. This definitely indicates that Microsoft is a bit overvalued right now, but it's also not wildly overvalued, and the stock got as low as $212 at the beginning of November, which is actually a bit below that fair value of $229 that I just mentioned. So looking now at some charts of Microsoft stock, this here is actually a 10-year chart, and we can see they have this nice support trend line that the stock touched back in March of 2020, and then again recently they touched that again in November. So if the stock falls down more towards that support line, I think that would be a pretty good opportunity. And looking now at the 1-year chart, we can see by looking at the volume profile on the right side here that they have a ton of price action in the $245 range, which is right around where the stock is currently trading at. And they also have been bouncing around between the 50 and 200-day moving averages recently, which has given them a bit of stability. And this long-term support line that we mentioned on the 10-year chart is right around $220 right now. So I think the stock would need to fall a bit more to look attractive. As we have seen throughout the video, Microsoft is a true behemoth of a company with a market cap approaching $2 trillion. This market cap actually peaked above $2.5 trillion in December of 2021, but has fallen substantially since. Their businesses are incredibly strong and are continuing to see double-digit revenue growth across many of the segments. The balance sheet, dividend history, and dividend growth are all fantastic as well, and I expect future great performance from Microsoft. However, the stock does seem to be a bit overvalued right now. I would definitely be interested in buying the stock around the $220 level, which is where I recently bought some back in November, and I will continue buying Microsoft over time at nearly any price really, because I do want to accumulate more of this fantastic business. However, I'll simply just buy a lot more when the price gets more attractive. But I would love to hear your thoughts on the stock, and if you have any opinions on what your personal buy price is, make sure to subscribe to the channel if you haven't already. Thanks for watching, and I'll see you all in the next one.